Good morning. Hank, SixFourTrading, talking about pre-market. This morning, the yields have been running up all night. Yesterday, turned up. They popped over a critical key level here. I've been tracking this trend line. Get into some of the lessons I'm talking about trend line, support resistance line. You guys don't know. Got some courses on all that information. Look in the description on the bio. Any case, we popped up, popped over. We hit this area here. Hit this key level at 4.5%. This is a channel that it was in. Popped out this channel, these green areas of channel, bounced around it for a while, popped back into that, popped up. That is concerning. 30-year yield is the same thing. US 30. This thing actually popped up and hit 5%. You do not want that to hit 5% pull back. I believe the market's gonna probably try to hold, push up, and it's just gonna dump and sell off. Trump's not budging. You can take a look at some of the news out going on this morning. We have a lot of stuff going on this morning for news. We have the Trump's tariffs and all that kind of stuff still in effect. China is not budging. The markets, Goldman Sachs and all those guys are calling for, the market to dump. I'm looking at a total 50% minimum drop on the market from the all-time highs. Still, if you dig into this on the news here, futures are choppy. Trump's tariffs take effect today. Actually, some took effect yesterday. We still have earnings, Delta Airlines, things that are going on, and the FOMC minutes are, scheduled to be published today. So we have a lot of information coming out today. I'll be cautious in the market. This is one of those days you kind of just stay out, just watch what happens. If you know how to trade, which means you can trade up and trade down, not just trade up. Let's take a look at the markets this morning. Let's take a look at the triple Qs first. Triple Qs, we've been holding around the same area, pushed up a little bit. This is why I think it's just a fake out. I talked about this yesterday, about this major support area. I'm gonna zoom out to a weekly chart. We get a better view here for you guys. And then actually let's go to a different chart. We'll do triple Qs here, which are on, and we'll go to a weekly chart. And we'll zoom out. Right, the support area I've been talking about is a major support area. Let me turn my indicators off. My SixFourTrading indicators. We'll get to that later, but this is where COVID was, and then we pushed up, which I talked about in the video yesterday, and pullback, Fed falls rate. But this is a critical zone. The support area is critical, and the market knows it. That's why the market pretty much is fighting to stay above this key level zone here. Now if we break into this area, kind of break to the bottom down here a bit more, and break through this is going to probably drop down to the Fed rate cuts, where the Fed's first started cutting rates down here to 340s, which I'm predicting it does. In my opinion, based on what's going on, there's no positive information coming out right now. Trump isn't going to budge. So either China capitulates, and then Canada piled on yesterday as well. Either somebody capitulates from those other countries, or this is going to break through and go down. So don't fall for the trap where it just pushes up like yesterday, day before yesterday, and then just sells all the way off like we did here. So going back to the daily chart, all the same, no changes here from overnight low. Actually is pulling down in pre-market, so I think this may just put out and test that. S&P 500 should be doing the same thing. The Qs and the S&P 500 follow each other. Yeah, pulling down, doing the same thing. No difference there. If we look at some individual equities, big names out here, NVIDIA, not really a big name anymore. AI is still a thing, but you're breaking. He's pushing up a little bit here. It did break under 100, as I was talking about a couple of other videos ago. As I predicted it might do. It needs to hold out of this area. If it does break through 90s, we are talking about coming down here to this area right here, around 76s. is where you're looking for NVIDIA to go. If the market starts to sell off, as I was talking about this morning, you definitely can see this fall probably down to 75, if not lower. I mean, don't get surprised that don't get caught up in, oh, the market can't go much lower. Oh, we're near a bottom. It has to bounce. Don't get stuck in that one track mind narrative, because you'll lose money. The market can do what it wants, and the market can go as low as it wants, unless something changes. It can go as high as it wants. Don't get stuck in a one track mind. That's all I'm saying. But anyway, that's Tesla. I'm sorry, that's NVIDIA. Let's go take a look at Apple, because Apple, these are like big market shares of the indexes, which drives a lot of the market direction. Some individual equities out here. There's a gap here that was filled that I've been talking about that happened. We shorted this all the way down to this gap. It's good stuff. 174 is on Apple. Apple can still go lower, right? Don't think we can't go lower. I think this is going to come down to 124 on Apple. Come down to this level here first, test this. All right, 164s, and there's nothing stopping this from coming down to 123s. If all this stuff continues at the narrative the way it's going, it is literally causing some short-term, irreversible things in the economy that could stretch out to long-term irreversible, which means even if they stop doing this today with the tariff situation, you have things that are affected by it that are going to take some time to come out of, at least in the short term. But the longer this stuff goes on, it becomes a long-term thing, which extends the time for come out of those negative situations. So that's what I'm saying. Like this, the probability of this hitting this is high. The probability of this coming down here is high. Some of your other big names, tech sector is the one that I watch the most, because it drives the market. It does what it does. The airline sector, you can take a look at the travel sector, right? American Airlines. I mean, this thing's been getting beat up, right? We've come down into areas. I'm a technical analyst, guys. So you come down to areas where you're hitting trend lines, right? And let me zoom out some more on this one. Doesn't want to cooperate today. Beat up, right? You're coming down into areas where you're hitting trend lines, and it's just, this thing sold off from 59 all the way down to like $8 since 2018. It's not doing good. And doesn't mean it can't go lower. I mean, it doesn't mean that this can't go from $8 to $1 on American Airlines. We talk about recession. We've already, in my opinion, already been in a recession based on some of the St. Louis Fed rules. The SOM rule, go look it up. It's already triggered. The yield curve is already triggered. Go look it up on the St. Louis Fed. The Fed knows this, triggered a recession. We've already been in a recession. We're going into something what I believe is going to be a depression. And I'm not trying to depress anybody, no pun intended. But you got to look at the facts. Look at what's in front of your face and try to plan for it. What I'm trying to help, just try to help you. Don't just follow the herd. Because if you follow the herd might go start jumping off a cliff like right now, and you're going to go with it. So you need to, make your own decisions. You should go look up your own information. I'm just guiding you to where you can go get the same information I'm getting it from. With the St. Louis Fed, they're telling the story about recession that's already been here. So if this recession's already been here and they're just now talking about pricing in a recession, they're behind the curve. So what's ahead of the curve? That's depression. That's all I'm saying. Anyway, the travel sector is not looking good, right? CCL, let's look at the boats, right? Cruise lines. I know a lot of people have been taking cruises, planning cruises, right? Stocks are still selling off on that. There is a trend line, try to bounce back up. It's below it. So if you break this trend line, like I said, talk about trend lines and all that kind of trend line strategies, I think that too, that you pull down to the 10 level, right? This is where I'm looking for this to go from 16 to 10. And then let's go take a look at the big boys again. Let's take a look at Google. Same, it's critical level, right? Bouncing out of this critical level. If it breaks this, we're coming down to 130s here. If you break 130s, you start talking about 119s. I'm gonna say 110s on Google. Tesla has been getting kicked. This has been a great trade going up, great trade going down. You got a lot of upper wicks here. A lot of upper wicks means sellers are, I mean, they're already in control. I mean, but they're rejecting, they're hammering down on key levels. It looks like it's trading in the zone here between 252s, 218s. We're at the bottom of that trying to pop up. You break this, 220s, things coming down to one under 100, easy on Tesla. Tesla can go lower, right? So then there's a trend line here, right there, right here. That I'm, this thing probably coming down to 165s. And it can come lower. Don't get caught in a narrative like, oh, it's been selling off so much, it can't go sell off anymore. Let me buy the bottom, like some of these people telling you, and now they're apologizing for it. Don't caught in it. The market can do what it wants. You go on with the mentality of that, you're better off investor trader for doing that. But this is, I'm reading what the charts are telling me. I'm reading these wicks. It wants to come down to this trend line. It might not. I'm just saying this is what the information is telling me. And having a couple of bad quarters on, earnings, right, with Tesla, their sales are going to plummet because a lot of stuff coming out of China. So you put two and two together and figure that out for yourself about what's really going to happen or what really could happen or what's going on. Apple, Apple just is up for no reason to me, in my opinion. There has been no catalyst for it to be up this high. It's just, a staple name and people just buying it. Thought it was safe, but Warren Buffett didn't think so. He's still sitting on a pile of cash. Smart guy. And so it needs to come down to test this line here because it's been tested before. So unless I'm looking for Apple to come down to 163 because it's like a magnet. This breaks, Apple's coming down on 123s. This is what I'm looking at right now. I don't see unless something changes and the narrative causes it to bounce back up. If it does, you're looking at a retest of 194s, actually 187s, 194s. If we retest it on Apple, Microsoft, pretty much in the tech sector. Let me take that off. Gold. Yeah, struggling, right? This is a key level that is holding for Microsoft. Breaks it, comes down to right here. Right, come down to 300s. If you know how to trade, it means you trade up or down. You could be making money on all of this right now. I mean, my indicators kind of help out there a little bit. It's probably too much going on right now, but this is just price breaking, and then this is telling me to get into a trade signal because the cloud is changing its narrative. But one thing I want to show you, like their stuff is curling down on the averages. They're breaking out of areas. It is oversold. Like oversold normally typically says, okay, we need to bounce, but it doesn't mean it can't get extremely oversold. Just like you can get extremely overbought, but everybody, most of you on this that are listening to this, that do listen to this, having a great time with the 2-year run up we have, but you've been getting overbought for so long. Doesn't mean you can't get oversold for so long. That's the narrative. All right, folks, I'm Hank, SixFourTrading. This is a market analysis, pre-market analysis before the market opens. Hope you guys enjoy it. Hope you guys get something from it and trade well. Talk to you later. Bye.